about Viking Therapeutics. I know it's sort of big trader stock. All right, the stock fell today 13%. It was up 8% in the morning because there was what some considered positive weight loss drug news on Vikings. Patients on Vikings oral drug losing a placebo-adjusted average of 6.8% of their body weight on the highest dose at 4 weeks. But then the stock sold off. So let's figure out what's going on here. Jared Holz is healthcare sector strategist at Mizuho. And Jared, you argue that overall the news was actually pretty good on Viking.
Brian, thanks for having me. I appreciate it. Yeah, I think on the surface, the data were good. I mean, it was kind of a reiteration of what the company had said about this program over the past couple of weeks. And the stock had done really, really well coming into this medical meeting that they're having now where more data kind of came out. But I think the fact that the stock had been on a nice run. And then on the flip side, there's so much more competitive data out there. AstraZeneca had some oral data. I think that was a contributing factor to the weakness today. And then as soon as we have anything good in healthcare, investors kind of look at the negative side of the equation as well. A lot of costs with respect to development and manufacturing, and the competitive landscape is obviously very strong here too. So I think all those things were factors today.
So, Jared, when you look at this, just give us the gameplay for the average trader. When it first started, you had Lilly, then you had Novo, and now it's Viking, Amgen, and you just named a couple of other names as well. How does the person who's 6 degrees of separation or maybe 3 degrees of separation away from this trade the space?
Steve, I don't know, actually. It's a great question. I mean, this is a game of leapfrog, it seems. Not in perpetuity, but at least over the next couple of years. I think you've got to have, from a trading standpoint, I think you've got to have one lead horse that you go with. That could be Lilly, that could be Novo, depending on the day, depending on valuation, depending on what the catalyst path looks like. So one of those, I think, is probably worth owning kind of at all times because they're the market leaders and will be for a while. And then I think you've got to just go down cap and find a couple of players that you believe might be instrumental over the long term. So a Viking, a Structure, a Terns, an Altimmune, a Corbus. There's a bunch of these kind of much smaller players in biotech. So pick a couple of those. I mean, Viking might be one of them. Maybe you get lucky with data or an acquisition, but I think you've got to have one lead horse and then maybe a couple of these smaller cap biotech stocks to own.
So Jared, in terms of the day-to-day action, we know it had earnings on the 24th, and it popped essentially from 60 to 80, and now we've retraced that entire move. And there's two types of weakness to take advantage of and weakness to stay away from. Would you buy into this weakness, or would you stay away from it?
Yeah, Carter, I think you buy it. This is still one of the better obesity names in the category. The data that they've shown have been excellent. We're in a little bit of a news vacuum as they move forward here into a larger phase 2 trial and try to get this drug, on the market kind of sometime in the 2028, 29 timeframe. So there's a lot of time in between, but look at what's happened to the valuation of the bigger players here. They've exploded. And so a $7 billion cap for what could be, maybe the third drug in this class is probably a buy here.
So, Jared, but what happens then if Merck comes in and buys Viking? And again, I have actually a position of Viking, so disclose on that. But it seems to me this outrageous move you've seen in Novo and Lilly, at some point, more competitors of scale means that this two-horse race is something that I think, and you can make an argument on the charts. Maybe Carter's got a view when we're done here. But those are charts that have broken down or at least don't have the same gusto. So, again, Merck steps in as a distant number 3 with Viking closing the gap. Isn't that bad for the whole space? Valuation-wise?
Yeah, Tim, I don't know. I mean, some of that depends on, if a Merck or another company were to come in here for Viking, what they pay for it. Viking's talked about partnerships in the past. Maybe you get a joint venture, you don't get a straight takeout, but let's just assume it does get bought. I mean, if it's a double from here, if Merck decides that they want to pay $15 billion for the company outright and then put in, the time and resources into manufacturing and commercializing this product, does it cap the space? I would argue that probably be pretty good for a number of the smaller players. I mean, I think Lilly and Novo would probably be down on that news because you would have, a much bigger company marketing the drug. So I'd be more wary of owning Eli Lilly or Novo on that than I would owning biotech. I think, for a takeout situation like you're calling for, it's tough to make a bearish case on biotech. I'd be just more leery on pharma.